Looking to apply for a mortgage? You may be wondering how much you'll qualify for. This will depend on a number of factors, including the size of the down payment you've saved, your credit score, your income, and any other debt obligations you may be carrying. First, let's break down how your down payment size will impact your mortgage qualification. In Canada, there are set minimum down payment requirements depending on the price of the property. For homes that are priced at $500,000 or less, you must have a minimum 5% down payment saved. For homes that are priced between $500,000 and $1.5 million, you must have 5% for that first $500K amount and then 10% for the remaining. For homes that are priced at $1.5 million and above, you must have a 20% down payment. Your credit score is also a major factor in how much you'll qualify for. Generally, the higher the score, the better, but most lenders require a minimum of 660. If your score is lower than that, you may need to work with an alternative lender and pay a higher interest rate. If you have a very low credit score, you may be denied a mortgage from a lender altogether. Your mortgage lender is looking for proof that you can afford to make your mortgage payments, and they will base this on your household income. This will include income earned by all of the mortgage applicants, for example, yourself and a partner. Generally, a lender will qualify you for a mortgage that's 4 to 4.5 times higher than your income. For example, if you have a household income of $100,000, you could qualify for a mortgage between $400,000 to $450,000. A big consideration that's often overlooked is whether or not you're paying down other forms of debt when you apply for your mortgage. This can include things like car payments, outstanding credit card bills, or any other loan types. These can have a large impact on the size of mortgage that you'll qualify for. In fact, for every $500 of additional monthly expenses you carry, that can reduce the amount of mortgage you'll qualify for by $100,000. This means it's ideal to have as few other debt obligations as possible when you apply for your mortgage, so you qualify for the largest amount possible. You can crunch your own affordability numbers with Ratehub.ca's mortgage affordability calculator. Simply enter your household income, down payment amount, the city where you're buying your property, ongoing living costs, and other debt payments. This will show you the maximum home price you'll be able to afford, the total mortgage required, and the monthly payment you can expect to pay. You can learn more about mortgage affordability at Ratehub.ca.